Coming up on the SBS On the Money podcast, the US applies a 10% import tariff on Australia. Profit reporting season kicks off. We take a closer look at ResMed. And is Australia's Canva looking to list on the Australian stock market? All of that next. Hello, everyone. Welcome to the SBS On the Money podcast for this Friday, the 1st of August, 2025. It's a day where the Australian share market fell by 0.9%. We'll have the details with Adam Dawes from Shaw and Partners in a few moments. But first, Donald Trump has revealed details of his updated US import tariffs, which include a 10% rate for most Australian exports. It is, though, at the lower end of the scale compared with others around the world. So to find out more about what this means for Australia and the global economy, I spoke with Shane Oliver, a chief economist at AMP. Ultimately, what does it mean for Australia, and how much of Australian exports actually goes to the US?
Well, the good news, if you call it that, is that our general tariff rate going into the US is staying at 10%. There was some fear that would go to 15 or 20%. But still, we're going to have 10% lumbered on our exports. Iron and steel and aluminium is still up there at around 50%. So that's still bad news in the sense that tariff is still there and it used to be close to zero. I guess you got to put it in perspective, though, because less than 5% of our exports go to the US. So you're talking about big numbers in terms of billions of dollars, maybe about $24 billion worth of exports being affected. But in terms of our total exports, it's less than 5% of our exports. And in terms of the overall economy, it's less than 1% of our economy. And many of those exports, for example, gold, can just be sent off to other markets. So I don't see a really big impact on the Australian economy from the tariffs on Australia. I think the bad news, though, is that these tariffs have now been locked in. They're on other countries. They're coming in somewhere between 15 and 20%. There's a few outliers to that, but it pushes the average tariff on goods going into the US up to 20%. Maybe not as bad as Liberation Day when it was threatened to be a lot higher, but that 20% compares to close to 2 or 3% at the start of the year. So that's going to be a big trade barrier for countries exporting to the US. It's going to mean less global trade. It's going to mean less global growth, which takes the edge off demand for our exports. So the real worry for Australia is the hit to our exports generally, as opposed to the 10% tariff specifically.
I've read some commentary saying even though it's a 10% rate, as you mentioned, it's at the lower end. It gives Australia a bit of a competitive advantage because others have higher rates. What do you think?
Look, I think Australia does have a bit of an advantage. I was a bit saddened to see that our near neighbour New Zealand was supposed to be on 10%. Now they're on 15%. Lots of other countries seeing much higher rates, in often cases, countries that we compete with. So there will be a slight advantage for Australia in all of this. I guess the question is whether we can ramp up production quickly enough to take advantage of it. And then the danger in all of that is that if we do that, then Donald Trump may take notice and say, well, they're taking advantage of their situation. I gave them a special deal of just 10%. I'm going to raise that to 15 or 20% like everybody else. So I wouldn't get too excited about Australia seeing good news in this. I think overall it's still bad news.
You're talking about how most countries got around 15 to 20%, right? When you look at it around the world, from what we know, who got the worst deal? And is it fair to say that Southeast Asia, for example, is one of the got the raw end of the stick?
Well, Southeast Asia certainly got the raw end of the stick, even where there were deals announced. Vietnam, Philippines, Indonesia, they were around 19 or 20%. And then you've got some countries like Myanmar facing 40%. Laos, I think, is 40%. China is still on 40% out of interest, although it wasn't included in today's announcements. And of course, across the ocean there in Brazil, some of their goods will face 50%. So there's a lot of countries that are doing a lot worse than Australia in all of this.
Okay, so now we're getting a little bit more clarity. What do you think this will mean for the US and global economies now? You touched on it earlier, and more importantly, the implication for inflation and thus interest rates.
Well, the good news is the worst case trade war scenarios seem to have been taken off the table for now. So we're not going to see a global recession. But nevertheless, it will still be a big dampener on US economic growth. The US households will pay more for their imports, for their goods, many of which come from overseas. US companies will see a bit of a hit to their profit margins. And globally, I reckon global growth, where you might have been talking about, say, 3% global growth for the next 12 months, you may now be talking about 2.5% or so. So it takes the edge off the global economy. That then has a flow back to Australia, a little bit less demand for our exports, which I think just adds to the case for another Reserve Bank interest rate cut and probably a few more after that. Basically, the global economy is looking a little bit weaker than was previously thought. Not the bad news scenario, not the disaster scenario that was once feared, but still it is going to be damper. That means a drag on Australian economic growth.
And finally, and I think you touched on it there as well, is this really the end of it? I mean, what can other countries do, and does the uncertainty still persist?
Well, I think the reality with Donald Trump is that these things come and go. He loves stroking his ego, and that's what he's doing here. The whole world is looking at his announcements on a day-by-day basis. So I would love to think this is the end of it. Maybe it is for a few weeks, but I reckon there's still a lot more to go here. The situation with China is yet to be resolved. The deadline there was, I think, 12th of August, so that could still come up. There may still be more announcements regarding China, and other countries which haven't yet got deals may come back and try and make deals with the US. So there's more to go on that front as well. And just finally, I reckon in a few years' time, Donald Trump will say, well, this hasn't turned out as well as we thought it would. Let's have another go at it. Does anyone really believe that the Japanese are going to invest $550 billion in the US, or the Europeans are going to invest $750 billion? When Trump's works out that hasn't happened, like with the Chinese recently, he will probably get upset again, and then we go through the whole rigmarole once more.
That is Shane Oliver there, the Chief Economist of AMP. Now, Market Day on the SBS On The Money podcast. Now let's take a look at the Australian share market, which did close lower today. The S&P ASX 200 down by 0.9%, 8,662. Sectors ended mixed, actually, at 10 out of the 11 sectors on the index were lower. The worst performing information technology, followed by healthcare and financials. The sector to rise, utilities. For more on the day's market action, including the market reaction to the tariffs and whether or not Canva will list on the market, I spoke with Adam Dawes, a senior investment advisor at Shaw and Partners. Adam, how did the market react to the 10% tariff for Australia? Why? And how do you feel as an investor? Does it change things?
Yeah, I think investors are a little bit worried about the growth, and especially global growth, starting to affect, and certainly tariffs. I think that tariff of 10%, I think it was great because it gives us some certainty about where we're going and going forward. So I think that's okay. 10% was fine. UK was 10% as well. Poor New Zealand got 15%. But overall, I think the sentiment is okay. The market did have a negative reaction on the open, and now we're seeing that. So I think investors are brushing it aside, looking forward, and it's good to see some certainty in this market.
Are there any real fears, though, about the way it'll impact global growth and stall rate cuts in the US, though?
Yeah, I think there is certainly that issue that inflation is going to be uncontrollable, or inflation is going to start. We do know once tariffs do come in, there is a lag of 3 to 4 months. And so then inflation might start to creep up from there. But overall, I think it's going to be okay. It will stall global growth going forward. The US has a little bit of firepower, as we do here at the RBA. We do have some firepower left to cut interest rates to potentially help growth moving forward.
Reporting season's begun. Any you're following today in particular, or some that you're looking forward to seeing, and why?
Well, we're looking at ResMed today. So pardon the pun, ResMed's giving customers and investors a good night's sleep. Certainly it was a cracker of a result today. The ResMed came out. Look, overall, they've weathered the storm of the GLP-1 drug in 2023-24. They're moving forward. They're moving to net cash position, delivering consistent growth, and investors are clearly noting that. ResMed's up around about 30% this year and looking at all-time highs today. So ResMed's one I'm looking at today. I'm very happy about. Next week, we've got AMP and Light and Wonder reporting on Thursday, and then we've got QBE on Friday. We'll definitely be watching those names.
Okay, one company that isn't listed, but there's rumblings about it potentially happening is Canva, the graphic design online company, right? Tech AI so much in focus. A design software maker called Figma in the US surged 250% on its debut on the market. So the obvious question is, Australia's Canva, it's a competitor to that company. It's being touted as the next big IPO. What do you think? What's your view here?
Yeah, so Figma, obviously founded in 2012, just like Canva, makes online software that allows designers to develop and build their softwares through applications or websites through their apps. Canva is expected to list in the US in 2025 or 26. So we're running out of runway in 25, but certainly 26. But with Figma's strong performance, it does raise questions whether they've waited too long. So that certainly is. But yeah, Figma, $19 billion market cap before it floated. Certainly Canva's about $32 billion, but certainly Figma, $65 billion day one on that. I think Canva will continue with its plans for the IPO, but I don't think it's in a hurry. And I'll certainly see how Figma's share price starts to settle over the next coming couple of days. But it definitely shows that there's interest in that space.
And finally, what are you telling your clients at the moment, and where do you see the opportunities for investors?
There's lots of opportunities there, and obviously, as like we said, we're going into reporting season, so we've got to be a little bit mindful. There's going to be a lot of volatility over August and how that's going to happen. We're certainly looking at the healthcare space. We think that is certainly going to be looking very good, and we'll see some upgrades in that healthcare space. And the tech space is certainly looking really good. We've got some good momentum, and we've got some really good tech stories going forward. A little bit cautious on the energy sector and the utility sector. Both were very laggards last year and worse performers. I think this reporting season, that's going to be about the same as well. So trying to steer clear of that energy space, but looking for more tech and healthcare to put in clients' portfolios.
There's Adam Dawes there from Shaw & Partners. And it wraps up the SBS on the Money podcast for today and the week. Don't forget, if you enjoy it, to give it a rating or review on Spotify and Apple Podcasts, and to click that subscribe button. See you next week.
This SBS on the Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.